Okay, so let's talk through the trade management of the chart shown on the previous page. So we've got our entry as shown, and the rules for this trade is that our stop is placed at the previous pivot high. Our break even is after 5 price bars have completed, including the entry bar, and our target is determined by trailing by pivot highs after the break even point. So our stop is placed at the previous pivot high. Now you should know what the previous pivot high will be. If our entry bar is this one right here, we are going to be going backwards looking for a previous pivot high. So is this high a pivot? No, because we've got a higher high to the left of it. What about this high right here? Yes, that is a pivot high because we've got a lower high to the right and a lower high to the left. Therefore, our stop will be placed above this high. So what about our break even? Well, we want 5 price bars to complete, including the entry bar. So let's count. Our entry bar is 1. This green bar is 2. The next bar is 3. The next bar is 4. And then we have the 5th bar. So at the completion of this 5th bar, we want to move our stop to break even. So at the completion of this bar here, as indicated by the arrow, as soon as that bar completes, we will take our stop from the original stop place and move it to our entry price. So if price ever comes back up from here and goes through to our break even price, where our stop is placed, we would have entered and exited at the exact same price. Therefore, we will not lose any money. And what about our target? Well, our target is determined by trailing by pivot highs. So what we need to do is after the break even point, we need to look at where our pivot highs are so we can start trailing our stop. So these two highs right here are the same price. Therefore, there is no pivot high there. Our first pivot high comes at the top of this green bar, because if you see, we've got a lower high to the left and a lower high to the right. Therefore, our stop goes above this high, as indicated by the black line, and then we see that 2 bars later, we get a break of this line, and that is where we would exit our trade. Now we're going to be buying there because this is a short trade. We sold at the entry price, and we want to buy back at the exit price. So what is your risk reward in this trade? Now it's quite easy for us to see the risk reward. We don't even need to see what's happening on the right hand side in terms of the price to see how many pips are in between the entry and the stop and the entry and the exit. The reason for that is if we look at the actual grid, we can see that the stop, entry and exit are on perfect lines. So we can see between the stop and the entry we have 2 squares worth of price. And if I just extend the exit price, we can see that we have 1, 2, 3, 4 squares worth of price between the entry and the exit. Therefore, our reward is 4 and our risk is 2. So 4 divided by 2, which is our reward divided by our risk, equals 2. So our risk reward is 2 to 1. So I hope that example helped. Now let's practice another example. Go through to the next page and I'll see you in the next video.